So good morning, good afternoon, good evening traders, wherever you are in the world. Victor's FX here. Today we have another weekly outlook where we're breaking down what is going to be happening in the markets and where we will be able to anticipate the next move that the market is about to make. Now in the previous one we talked about EURUSD and I explained why we were still bullish on EURUSD. I mean, this week has been a very downsy week. As the week has been, the week has just been very downsy. Yeah, it's not really a straightforward week. So a lot of people have been caught on different type of buyers, different types of orders, different types of things. But still, the powerful hand is still shown so far. So the market has not broken any major low, and yeah, your management is what's going to save you during times like this. Okay, so some days you might wake up and take 2 losses, 3 losses. You need to have a defined set of things. It's not as if you come into the market every single day expecting to go home a profitable day. So there should be a loss limit, a daily loss limit, a weekly loss limit. There should also be, like, not really profit targets, but there should be a rough amount of targets. Maybe you made a lot of profits that you need to cool off. You take a lot of losses, you cool off. So instead of just funneling your accounts in. Okay, so yeah, I talked about I was on this long on EURUSD, and I explained that if it does go down, we're out of this trade, right? I also drew out this zone last week, if you remember. And on the 1 minute there was a very nice trade on this zone here. So this trade, there are many partials were just taken out at break even. So yeah, there was a trade here on the 1 minute time frame. If you were able to look at accumulations, actually let me go to 1 minute and see if we can get back there. I doubt it because I'm not using a paid version of trading view. I might get one soon. I mean, I normally get it, but these days yeah, trading view is just crazily expensive, my guys. But obviously I might just do a yearly or something. So yeah, there was an accumulation here. Also, there was another accumulation here that you would have caught. It doesn't have to be the 1 minute. It could be 5 minutes, 15 minutes, and so on. So there was a sweet accumulation here. Accumulation being what? Price. You can see here price drove lower, but there was just like one break. I love to see double breaks. Here there was just like one break. No significant second break, right? Now, in this other one, you can see how smooth and clean it is. Now, doesn't mean if you took the first one you were wrong. Obviously, you might have gotten a break even or so on. It happens. So this was just a drive down. You can see price was driving down. Then it broke first. Or like, okay, it broke again, and that was when I was like, okay, this is not bad. And this was a very nice one. You can see it's like 1.8 pip stop loss. Normally, I don't even like tight stop losses like that, but when the market presents it, well, we have no choice but to take it. Now, this is how you keep executing on the same thing happening in the market. For example, you can see breakdown here, breakdown here. There was break to the top side, break to the top side. Here again is a demand zone. Down here is a demand zone. So you have to take a risk on this first demand zone here using the triple M entry, and that first would have worked out. And if you had failed, you're gonna take the second demand zone. As simple as that. Make sure you're holding for great risk rewards, because trading on these low time frames can mean a few more losses compared to trading on a higher time frame. So that's why you also have to regulate yourself. Know how many the risk percentage you need to have per day. So even though I did not mark up a trade here ideally would have been a trade. Why was there no trade up here? There was no manipulation. Yeah, manipulation here. Where is the break of structure? No break of structure. What happened? Manipulation here, broke down. So initially my thought would be trade. It has to come down to this demand zone down here. So even if I was looking at this break and seeing the second break, here would be a sell signal rather than a buy signal. But normally I don't like to do counter trend, except maybe when I'm in a lot of profits and I just want to place a trade. I do reduced risk and play the counter trend that are very clear. And yeah, that would have been a great trade if you managed properly. It just kept bleeding down at the zone where we expected it to come back to. There was no sign of accumulation, and price just bled down. Okay, was I like now bearish on USD just because of that huge drop? This is the drop right here. No, as I started doing this, I instantly assumed accumulations. So you need to have a very tight criteria. I think that's what is really going to separate the profitable ones from the non-profitable ones. You should have a very tight criteria and also trade during liquid zones, during liquid sessions. I know that the market has a higher probability of moving in your favor, or of really generally moving. Trade those sessions so you can be able to understand what's going on. Now USD just give a low here, the first break, second break, right? Let's just see, the second break happened on the second side. So maybe this place triple M, you get your entry. Maybe you got broken even or reduced stuff, or maybe you took an SL here. Any of them that happened wasn't too bad. Just management, guys. This is a breakdown, a break high. You might have been aiming for this zone here to get entries. If you were, well, congrats on that. Or maybe you took this first entry here and then maybe you got stopped out. The second entries here would have made up for it, or maybe you waited for this other break and then, I mean, there are just different ways. Sometimes I'm just a bit aggressive on my entries because not every entry is gonna be perfect. But when I see what I really want to see, and I know that there's a huge potential to the upside, that is when I'm like a bit aggressive. And I also have different kind of entries. I have DMB entries. That's like my criteria. I might enter here, my stop loss will be under this low. It looks like a breakout and so on. So I'm trying to work on that particular entry now on a bit more aggressive pairs such as US30, so I don't have to always wait for the most perfect scenario to get into trades. I mean, that's just the way Forex is. Not every time you're gonna get the most perfect entries, but when they do present itself, you make sure you catch it big. Okay, so yeah, this is just the same thing we're talking about. You can see the accumulation here. Price went higher. Okay, once the price breaks down, what do I look for? I instantly assume accumulation, and when the accumulation is valid is when we've got a good break of structure. You can see even this alone could be a break of structure that I could take trades based on, but normally I like to see double breaks. So this first was a very good break of structure, but there's no clear zone for you to get buys from. That's when you can go to the higher time frame and look for a triple M, get into a trade, or you wait for the second break. Okay, you waited for the second break and now you marked out this demand zone. Was there any confirmation here? No. That's how you basically fit that trade. And you can see the distance between one trade to another might be 4 hours, might be 6 hours. So that's why I'm not really a big fan. You can see we're even on the 3 minutes time frame. I'm not a big fan of you have to get a trade, 2 trades per second. Okay, same thing happening here. Price are breaking down. I see assumed bullishness, guys. Bullish is what we are looking for. Just a bullish price action. I know this might sound toxic, I might sound egotistic or something, but it's just until the market actually gives me the shift to bearish, I just want to be playing accumulations. I just took this as a liquidation of lows, and sometimes I'm just sitting on my hands. Okay, I told you guys I'll not really trade EURUSD that much this week, and that was the truth. I didn't really trade it much. I'm just marking out the opportunities you have. This is the breakdown lower. Obviously, some people might take this as a break, and this way maybe you took a trade here, it went a little, and then you got a loss, something of that nature. You took a break here, break to the top side. You waited for this mitigation here. Did it ever come down to this zone? Nope, it didn't. Did it come down to this zone? Yes. A mini trade, maybe a break even here, and then you waited for the second final break. It broke to the top side, and then yeah, this is the case. Type of scenarios I just like to use higher time frame. When I see the higher time frame is already kind of accumulating and giving me multiple triple M's, this is when I'll be like, the breakout of that consolidation is what I want to take. Okay, that's just the scenario. Obviously this is hindsight, so it might look like, oh, you're not gonna get this every day or something. This other zone here, if there was a higher time frame stuff, if you took it, you would have gotten a loss. Okay, but scenarios like this that work out are gonna cover all those losses. That's why I'm big on risk to reward. It's just the only thing that can sustain you in this market. So let's say this successfully moved away, you must not have an entry here. If you were very tight on your rules and you really needed it to come down here, there was no trade here. Okay, and then you waited for until price broke down. Where did price break down again? Price broke down here. It broke down here, and then we've got to break to the top side here. Okay, further breaks here. Maybe you took an entry here, it went to profit and broke you even. Right? Now you draw out your next demand zone, which is down here. You took an entry there, very tight stop loss. See, your stop loss was here, and yeah, this was a very nice trade if you managed properly. Management is a very big thing. Yeah, so yeah, the same thing keeps happening. This is another demand zone. A very good triple N happened here on the 3 minutes time frame, because why would not take this small one is because it's not really a higher time. This zone is bigger than this. You could easily confirm this way multiple times, but when you see a very black stuff and it comes into this zone, you know that anything accumulating there will be proper, give us a proper displacement. Now I'm zooming in too much. I'm gonna stop now. I'm just trying to explain accumulations, so a lot of you are trying to understand it. So if you keep following this market up, there are a dozen accumulations that you have been able to catch. And why you are not always changing your bias is because you are bullish and you are only looking for the bullish confirmations to get all of these confirmations here. Now, when price, there was a news that took price EURUSD a little bit higher, and yeah, this was the demand zone. It held quite beautifully. Now, why I'm drawing out this supply zone is not because I sold here or something. This is just all for backtest purposes. I was like, okay, if this was an accumulation, why was that high not broken? We got another accumulation here, and I was just marking the spots where the accumulation came to, and before it dropped off. So this was not in any way executed whatsoever. So yeah, I was like, okay, I was just trying to get the intention of the market because it started dropping from here. So all of these drops here made me know that okay, we're gonna get back into this demand zone here, or this accumulation zone. Okay, and our prices came back right into it during a very key time, NFP. So NFP was able to blow down here, and normally I feel NFP should be able to set the direction of the market after a lot of craziness. And after this NFP stuff, you can see the rally away from that zone, breaking multiple structures to the upside. So yeah, I'm sorry if it sounds like a cliche, but I'm still bullish on EURUSD. I still want to see these highs run. I still want to see all of these zones taken out. Okay, so it's not just gonna go straight up. That's one thing that beginners just want to see. When you see price breaking down, wait for the breakups. That's when your edge is ready to play out. Okay, for example, as price is breaking down this way, it's breaking down this way, keeps breaking down. There is no edge for you right here, except if you want to force sells. Okay, there is no edge at these zones because generally the price has been bullish and all the bearish attempts will have been failed. Look at how many times this market has visited this top. Some might say it's a distribution, but even if it's a distribution, you need to see the break to the downside. See how many times this market has gone up. It went the first time, it broke this first time, it took how many days to come down. Check the impulse up. Very few times it just impulses up. Yeah? And during news, the news when I really wanted to set an intention, it might have broken low this way, but the news still didn't set an intention. So this is what we are looking for in EURUSD for the coming week. Enjoy. So please trade safely, not financial advice, please. This is just perspective based, and trading carries a high level of risk. So whatever you do is your responsibility. Now on USDJPY, one of the sweetest pairs here. On USDJPY last week, if you can rewind our call, I talked about this stuff breaking this high, continuing bullish, breaking this high, and you should look for any demand zone. When I say any demand zone, I mean any demand zone to take price higher, because this already is our accumulation. So the next demand zone should have a higher probability of holding, take price higher, right? Yeah. Now after that, this was a push away from that zone, showing the intention of this accumulation, and price was relatively bullish all this while until price started doing what? It broke the high. Now it broke lower, so we're first of all assuming accumulation, but at the end of the day, after so many failed attempts to go higher, it started breaking lower. at this point it had already taken out the first this other demand zone here. So I've been expecting price to come down to this zone here. Sorry about that. Let me use a kind of like a rectangle tool. Okay, I would have been expecting price to come down somewhere around here. And even if I went to the 1 minute and confirmed this, took a trade, and later I broke down once more, that is when I stopped looking for trades. I sit on my hand until price does what? Give me a clear break to the top side, clear break to the top side. Then I might come back into the market to look for more trades. Or if I wanted to be on the more dangerous side, I could be taking the sells, okay, because I've already gotten a distribution, break to the top side, break down, double breaks to the downside, double breaks, showing that something like a trend is starting to form, a mini trend, okay, because the general trend of UJ, I told you guys, we've been looking for bullishness and until the price tells us otherwise. So here you would have gotten a lot of great bearish plays if you were looking for bearishness, bearish plays, and it actually continues for a long period of time until it came down into this our zone. And this zone, I think I marked this zone last week. I hope I did. This zone down here was the zone that I marked out this week, expecting price to come into it and go bullish from. And if you zoom into the zone, you don't have to take trades every day. That's why sometimes the zones might take weeks or take days to get into it. That's your edge. Waiting is the edge. Or you are taking sells until you saw this zone holding. Okay, so as you see, even here you might have still been selling, and as price went broke lower, failing to break lower the second time, started breaking higher. You should have been concerned, like, what's going on? What's the price doing at this point in time? That's when you start looking for accumulations, right? Now this right here is just, all these trades are just perspective based. None of them are really one of the greatest examples. This was a break to the downside, so breaking to the top side, breaking to the top side, you look for demand zones. Nothing is going to be perfect. This time around, maybe you got a break even, you got a loss. You got a break even, you got a loss, or something of that nature. That's just the way it goes. Break even on this one. That's just the way trading goes generally. So yeah, you can see price later started confirming lower once more. A lot of sellers piling in, but we already know we are in our zone. So until price breaks this low here, we'll just be waiting for the best bullish scenarios to come into perspective. Yes, now this is a very one of the most beautiful looking accumulations. I think this is a 15-minute trade or so. This is the break to the downside, break to the top side, beautiful mitigations and continuations. And yeah, price just came back to it, came back to this accumulation and started going to the top side. Just came back, started going to the top side, and even NFP news was on our side. Yeah, but obviously I don't advise you to trade NFP if you are trading your personal accounts that's tangible, or you're trading a prop firm account. Don't do it. But maybe if you wanted to grow a little capital, of like the smallest capital, you might just put risk on it. I mean, use any of those brokers that have very high leverage. Maybe $10 you're supposed to use for coffee, you might put it into NFP and then maybe turn it into $100 or $200. I mean, just risk what you are willing to see go to negative. Or you could use a very fat stop loss, maybe this type of stop loss, risking 0.5 or something. So when you know you are covered in case it goes against you, maybe your stop loss might get triggered on the way. Else, just stay away from NFP. It's not a fun activity to trade. It's not fun, especially when you have real funds at risk. So this was what the market gave us last week. I remember we also talked about US30. So if I'm looking for the week, I just want to see continuation on UJ. Continuations, when the prices come bearish, I sit on my hands, or I reduce my risk and confirm and wait for better confirmations before I take sales. That's distributions before I take sales. Or else this is just what I'm looking for the week. I think we have CPI this week. So the week is really going to be interesting. On US30, this was what I was looking at. We talked about going bullish. from this zone down here. Price held relatively well, but at the end of the day it was just like nope. So right now I'm really in the middle with US30. US30 it was a great week, to be honest. It was a really great week, but I don't like what it did here. It went down once more, and then starting to break to the top once more. I'm favoring bullish, but I'm just going to be a little bit more careful in confirming it, because I think this market also has bearish intentions. The way it just broke higher, and we're just happy to go bullish, and then it broke lower once more. So maybe something fundamentally is going on with US30, or something is just looking for US30 to go bearish. So yeah, I might start going bearish on US30 depending on what it presents, and if it's in this bullish context right now, I'm not looking for any bearish place for now until it gives me a good distribution. Then I would understand that the whole reason why the market went higher this way was just to take out a lot of weak-handed sellers and then show its true potential. So sorry about that. That's why I'm usually flexible. I don't want to be rigid, but when the market is telling me something clearly, I want to stick to it despite what my little trades are saying. So yeah, that's what I'm looking for on US30. If you have any questions on these pairs we're looking at, please feel free to drop it. Yeah, so US30, I see a double break. I'm definitely gonna be selling. Yeah, so even though I see that I was gonna be bullish on US30 last week, I took some magnificent sales during liquid sessions, because that's when your risk to reward will matter. During liquid sessions is when you can catch trades with good risk to reward. So I took a beautiful sell, like 2 beautiful sells, a few buys, and so on. So yeah, that was just what I saw on US30. US30 might be going for a bearish push based on what the price action is telling us. Break of high, break of low. After, and you can see how fast they break. That's what I want. I want to see momentum when there's a change in market structure. I want to see momentum. So maybe we'll write it down to this accumulation or wherever it takes us before we start buying, which is our general buyers on a monthly, weekly time frame. So yeah, we're just gonna see what's gonna happen. If it keeps pushing bullish, I bet you I'm gonna be on the bullishness, just using double breaks to know the direction. That's just what I want to do. I don't want to be crazy about anything, and I don't want to be the legend to predict the 100 pip fall. I just want to get my good risk to reward under good market conditions. So I know I've ranted for too long, but yeah, that's the case. So that'll be all for today.